The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the April 29th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. And let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to Steve at TFNN.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day here at 8:08 in the morning. So if you're listening to 11:08, thanks for doing so. We're going to try to make this show as pertinent as we can for your hour as well. But right now, we've got a mixed bag here with regard to U.S. equity futures. You got the S&P ES-Mini down by a half a point, one tick. Quarter tick, 3/4. You've got the NASDAQ off 21 points. Dow futures up 165. E-money Russell's up 1 point. Over in Asia last night, a bit of a mixed bag. Shanghai, I don't know if the Shanghai was open last night, but it shows being down 2 points. Hang Seng up 36, Nikkei up 134. Over in Europe right now, you got the FTSE trading up $26, the DAX up 160. We're going to take a look at each of those markets. Gold is off $31, silver's up 21 cents, copper's up a nickel, light sweet crude is off a buck, natural gas up 3 cents. 30-year Treasury printed out at 116.09. That's off 3 ticks. And you got a U.S. dollar index that's up 366 ticks, printed out at 99.15. I do have a 10-minute delay on the U.S. dollar index. So we're going to change Stevie's screens out here. If you give me just a moment, we're going to go take a look at change the stream. Let me see what this does here. Time screen. Should get now. We should momentarily have the Shanghai, the Hang Seng, Nikkei, FTSE, and the DAX charts up on our screen here. So this basically, I'm going to start my day here with you the way that I start my day, which is trying to understand what took place overnight. So we take the Shanghai index. Here's what we know. We know that we have a TD9 count topping pattern that went ahead and completed on April the 24th. And what price has been doing, we start to see here a series of lower highs. So it's making its way back to its oscillator and change line, which is at 34.32. If price were to close below this, and especially because it's red, that would be a bearish indication. That would tell us we have a falling price oscillator below zero, and that would then suggest a run down to the 33.65 level. That's its actual breakout area. In the case of the Hang Seng, so we got a top in the Shanghai. You have a TD9 count top inside the Hang Seng. That suggests a rally. That suggests a move back to its oscillator and change line as well at 21.695. But here we don't have really a series of higher lows out there. But price should still make its way back towards 21,695. The Nikkei completed a TD9 count top this morning. That says that the key did complete. They confirmed the TD9 count top this morning. They will complete that pattern tomorrow. That too should lead to a retrace back to 34,386. So all of the three primary markets that you and I look at for Asia, all suggesting that price should begin to pull back. It may not be until Thursday for the Nikkei. We look at the FTSE out here. The FTSE does not have a topping pattern. Yes, you can see a TD9 count, but that TD9 count high was bar number 7, so it doesn't qualify. Price here is suggesting to you and I that it wants to make a move up towards the 86.71 level. That is its TD9 count breakdown area. And we take a look at the DAX. The DAX completed a TD9 count pattern yesterday. Now, the DAX is highly directionally correlated to the NASDAQ 100 for reasons I don't know, but there are reasons out there. The reasons are just simply the actuality. You and I have taken a look at it. Now, in the case of the DAX, the TD9 count top is at 22,443.41. We're 22,432 right now. If price were to close above 22,443.41 at day's end, which I believe is 11:30, we will see that'll negate that signal. That would then suggest the DAX is going to rally up towards the 23,204 level. What should unfold is it should retrace back towards its oscillator and change line. But you're going to want to watch this at day's end, because if price, and I think there's a couple traders in the den that pay attention to the DAX and oftentimes put on short trades when the DAX closes. I would suggest that you really watch at 22,443.41 level, because if the DAX closes above that, its message is that the NASDAQ wants to continue its rally out there. So that's what's going on with those charts for the daily time frame. Let's go take a look at the U.S. dollar index. So I've got my data feed on here that allows me to go take the U.S. dollar index, which I typically don't have on during the 11 o'clock hour. Just gets a little bit more complicated for me. But here, if we take a look at the U.S. dollar index, we know the euro makes up 58% of the weighting. The euro has a TD9 count top. What we've basically seen is a move somewhat sideways. But here, over the last 3 trading sessions, 1, 2, 3, we've got lower lows out there with price finding resistance at that oscillator and change line. As long as price remains below the green oscillator and change line, that TD9 count pattern, well, it would remain in effect no matter what. But if price were to close above it, that price would be targeted. The pattern would be targeted. If we take a look at the yen formed a TD9 count bottom pattern, looks like about a week ago. It's traded above its red oscillator and change line, currently printed at 141.88. That makes 14% of the U.S. dollar index. So in this case here, the Japanese yen is signaling to us, as long as price remains above that oscillator and change line, that it should move higher. If it moves higher, it's going to weaken. The U.S. dollar index is going to get stronger. If the euro moves lower, it's going to weaken. The U.S. dollar index is going to get stronger. The Great British Pound yesterday negated a TD9 count top. Closed above it. It has a Rhodes momentum indicator signal. It requires a bearish reversal candle to confirm a Rhodes momentum indicator top. And that would then also require at least a close below 1.33542. That's its oscillator and change line to suggest that it really does want to move lower. We had an election in Canada last night. Really pretty calm here with regard to the currency pair, the Canadian dollar, that is. It's got a nice TD9 count bottom pattern, price holding that red oscillator and change line. We take a look at the Swedish krona out there. We can see it's got a TD9 count and Rhodes momentum indicator bottom. That wants to rally up towards the 10 area. And if we take a look at the Swiss franc has a buy the D point bottom pattern with price trading above its oscillator and change line, and it likely wants to move higher. Now we finally get to the U.S. dollar index. The U.S. dollar index is a conglomeration of those 6 currency pairs. You got to look at those to understand what's going on. Now here in the case of the U.S. dollar index, we have nothing more than a consolidation with inside its daily profile. And that runs from the bottom of its profile at the level of 98.77 up to the top at 100.15. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, folks. Let's take a look at the daily equity future contracts right now. We got the ESNQ, the Dow, and the Russell 2000 up on our screen here. Now, in the case of the ESNQ, they both triggered AB equals CD patterns to the upside. Neither have passed the B point with volume at this stage, but just because you don't pass with volume doesn't mean these patterns won't come into fruition. Now, in the case of the NQ, we can see that price is trading up towards the top. It's trading inside its sell zone. The sell zone was established by those task market profiles. The center's at 19,327 and the top is at 19,685. But price can close above 19,685. It increases the odds that the A to B equals CD pattern that gets up towards the 2650-ish type area would take place. If we take a look at the ES Mini, the ES Mini right now is just approaching its sell zone. That begins at the price point to 55.85 and ends at 57.73. Now, its A to B equals CD pattern isn't too much above the top of that daily profile, 57.73. Now, the ES Mini has traded higher for 5 consecutive trading sessions out here. Let's go ahead and open up the chart. Take a look at the bottom portion of the screen out here. It's actually so we can view it. And there we go. We have not seen a 5-day rally out here. So that, just getting to a 5-day rally, typically, if you have a kind of like what we refer to, or I refer to as a kind of a knee-jerk reaction out there, that typically takes place in bars 2 through 4, or 1 through 4 at least, but typically 2 through 4 out here. So now that we've gone to a 5-day rally to the upside, it says that this move is real. We've got a number of things that say that the move is real out there, but so it's got an A to B equals CD pattern to the upside. We don't have that same pattern, at least not at the moment, with regard to the Dow equity future contract or the Russell 2000. In order for the Dow to generate an A to B equals CD pattern, it has to close above the high of April 10th. And the high out there is 41,140. In the case of the Russell 2000, there ain't no A to B equals CD pattern that we can come up with here. Period. And it's traded with inside its profile. It's traded above the center. It's traded above its oscillator and change line. It has made a series of 4 days now of higher lows out there. So we know that that's a bullish signal. It likely wants to go target the 2054 40 level. That is the top of its profile out there. One of the requests that came in early this morning was from Tom G. And Tom wanted to take a look at light sweet crude. So let's go take a light sweet crude out here. Light sweet crude right now trading below its daily oscillator and change line. This is the June contract. Now, the oscillator and change line has held its support over the last about week and a half or so. That number is 61.44. So that's the first thing that you're taking a look at. Where does price close today? Does that level hold? If price closes below that, and because we are also trading inside its swing point from April the 9th out there, it would increase the odds that price wants to go target that low, which is 54.67. Now, before price get down there, let's take a look at our intraday charts. The intraday signals out here, if we just start with a 10-minute time frame chart, Rhodes momentum indicator bottom, price finding resistance in the sell zone, 61.25 to 61.29. So, Tom, if price closed above 61.29 for the 10-minute chart at least, it suggests it wants to rally further. Rally further to where? 61.41 to 61.46. That happens to be the bearish structured zone of its 15-minute time frame, which also has a Rhodes momentum indicator bottom pattern. The 30-minute, also a Rhodes momentum indicator bottom pattern. Now, in the case of the 30-minute chart, counter trend rallies would end somewhere between 61.31 and 61.46. So we got that 61.46 number that keeps popping up. If we take a look at the 60-minute time frame chart, you've got a TD9 count bottom pattern that completed at 8 a.m. as we came on the air. This needs to see a close above that red oscillator and change line. We can see that on the 60-minute basis, ever since about 5 a.m. on April the 28th, price has been below that level. If price can close above that area, that's going to be your first clue. On top of the second clue, your first clue was the TD9 count bottom, but it would be the first clue that, okay, may gain some traction. Now, there's additional resistance above the oscillator and change line on the 60-minute time frame. We've got it at 61.30 and 61.58. It closed above 61.58, gets us to 62.07. Now, back up to that top row of intraday charts. There's no bottom signals that I see at this moment in time. Let's open up the 2-hour time frame chart, see if there's an A to B equals CD pattern to the downside. There most certainly is. Have we attained at least the 1-to-1 level? Whoops. Don't know, but we're going to go find out here. Hey, how about that last 5 minutes of that hockey game last night? Now, I know those folks that reside in the Tampa Bay and that are Lightning fans, and I am a Lightning fan, but I am down here in Palm Beach County, and so now I'm a Panther fan as well. But what a heck of a last 5 minutes. I never didn't see that one coming. In any event, on the 120-minute time frame, the A to B equals CD pattern has not completed itself. It would do so at around 60.60, and what you'd be looking for there is some type of bullish reversal candle to then confirm a buy the D point pattern. We are in bar number 8 on the 4-hour time frame chart, Tom. This 4-hour bar that we're looking at completes at 10 a.m. That says you could get a TD9 count bottom between 10 and 2 this afternoon. A 5-hour time frame chart suggesting it wants to make a move to 60.24. So that's what's going on. You're looking for a short entry into, you're looking for a short entry into NVIDIA. With regard to oil, I just think you wanted me to take a look at. And so I've done so. You know what to watch really to the bottom, because you've got those TD9 counts and daily Rhodes momentum indicator bottom. So your key level of support this morning is going to be 60.79. If you start seeing close below that, we're headed lower. Inside a light sweet crude, and I'd say 60.24 being a likely price target. So I hope that helped you out there with regard to oil, Tom. You also had a request to take a look at NVIDIA. So we know we've got plenty of debtors that want to take a look at NVIDIA as well. So let's move over to that set of charts out here, daily, weekly, and monthly. Now, what you indicated is you're not comfortable going long NVIDIA, and you want to take a short position. Just out of curiosity, give me a moment here. Where's NVIDIA trading in the pre-market? We can go to Stevie's screen and find that out. I'm just curious. Maybe you're curious as well. NVDA. Last trade here fired off at 107.90. A lot of trades firing off at 107.90 out there. 107.90 is lower than where we're at, where we closed yesterday. But is that enough to take a short trade out here? My suggestion is, and actually 107.90, we're just trading inside that bar from a couple of days ago, April 25th out here. The better spot to sell, if you want to sell from an NVIDIA standpoint, I would have to say would be the top of its daily profile. That would be one area, 112.87. If that didn't work, I would say it would be about the 118.84 area. And that's going to be the daily TD9 count breakdown level. Now, what we can see here at 118.84, it gets us up towards the weekly oscillator and change line. But if there were to be a rally, that number is going to move to the upside out there. So, yesterday was day number 1 to the downside after a 4-day rally. It spoke about knee-jerk reaction type lows. Those typically take place after 2 bars to the downside. Maybe today's going to be a second bar to the downside, but it can be 2 to 4 bars to the downside. Daily's got a nice TD9 count bottom. Weekly's got a nice Gartley buy pattern. And the monthly chart, let's actually populate it here, see what we have. The monthly chart, which is going to close tomorrow, if it can rally and close back above the bottom of its profile, which for NVIDIA is 109.42, then support will have held. Now, if it closes below 109.42, the bottom of its profile, to be the second consecutive month below that level. And that's just telling us about it's trying to put pressure to the downside, while the daily and weekly are trying to put pressure to the upside. So, Tom, that's what I've got for you this morning on NVIDIA and Lightspeed Crude. Hope that helps you out, and best of luck to you. We come back to this break. We're going to look at SLS for Dan. We're going to look at Meta for ELO. And, of course, I'd love to field your request as well. Steve at TFNN.com. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We are recording the show. It's 8:31. If you're listening live at 11:30, thanks so much for doing that. We'll be back to normal programming hours tomorrow. We're taking a look at ticker symbol SLS. This is for Dan inside the Tiger's Den. And Dan is wondering if I see anything at $1.49. And Dan, the answer to that question is, let me just check the monthly chart. I don't believe so. $1.48 is the top of the monthly time frame. So we're going to split a penny out there. That's the only thing I see at $1.49. Now, what I noticed, you probably noticed this as well, is yesterday went ahead and confirmed an A to B equals CD pattern to the upside. The B point of the pattern, I'll draw it in, is the trading session of April 21st. And that had 1.8 million shares, and the high there was $1.40. We closed at $1.41 yesterday, and we did it with 2.7 million shares. So that triggers an A to B equals CD pattern to the upside. It began with a TD9 count bottom on April the 7th. So let's go ahead and draw in this A to B equals CD pattern. It gives us a price projection of where price is likely to head to. Now, that retracement is certainly, I'm hoping it's about a 0.382 retracement out there. If it would be substantially less than that, then this really isn't an A to B equals CD. But visually, it looks like it is to me. Price had pulled back and found support at the center of its bullish structured profile out there, so it makes sense. Now you closed above the top of that profile yesterday and the day before, and yesterday, again, as I say, triggers an A to B equals CD pattern to the upside. That says you get back to about the 171, 2, 3 area out there, but that retracement being such a shallow retracement, 0.382 or thereabouts, increase the odds that this will do more than a one-to-one move to the upside. So that would suggest that because we're trading inside the weekly swing point high from April the 7th out there, that what price really wants to do is go tag that high at $1.84. Now, there were 16 million shares that traded hands that week. Last week, we were up with 8 million shares. So lighter volume. Does it matter? Well, the only thing that it matters is it doesn't give you the same type of conviction, but doesn't mean that fruition doesn't come to play out here, which is moving up towards the top of that swing point out there in the $1.70 type area. Now, in order for price to do that, price has to go ahead and about a 30% retracement. Okay, thanks for checking that out, Dan. So I mean, close. Fairly close. We're gonna go ahead and label it right now as an A to B equals CD pattern to the upside, and it's more likely to come to fruition if price closes above the top of that daily profile. That's at 144. But then above the 144, you were asking, is there something at 149? And I got 148, which is the monthly profile. So it's approaching that moment in time out there where price really needs to close, I would have to say, at 149 or above. So there's how your 149 comes into play. You close above that, you are likely headed up towards that 170 level. So I hope that helps you out with regard to SLS, and best of luck to you there. ELO wants to take a look at Facebook. Facebook out with earnings this week. I don't know which day they're out with earnings, but if we take a look at what the meta charts are communicating to you and I, it goes like this. First, we look at the daily time frame. The daily time frame formed a Rhodes momentum indicator bottom. It formed it with that bull separation candle on the trading session of April the 22nd. In price at that stage was trading inside a bullish structured profile. We've been above the center of that bullish structured profile for 4 consecutive days. Typically, when you close above a bullish structured profile, price will make a run for the top. So that price target to the top is 589.77. Looks to me like that's where Facebook or Meta is going. Since the bottom out here, now Meta is super strong. What do you mean by super strong? And we know we've got light volume to the upside. Remember, volume is only one aspect of a table, of a chair, that needs 3 or 4 legs to truly make it stable out there. Look at the series of higher highs and higher lows, at least the higher lows out there. That has been consistent. It hasn't missed out on that. So in this case here, 589.77 seems like the likely target. However, before price get up to 589, it's got to contend with the bottom of its weekly profile and, quite frankly, the center of its weekly profile. So if you were to ask me, ELO, where does a counter trend rally to the upside in Meta end, it would be between 564.60 and 585.28 out there. If price were to close above 585.28, and especially close above that green oscillator and change line, not too much above that, that's printing right now at 596.63, that too is a bullish structured profile. And that would then suggest not only do we get to 589, but the price target could be 647 to 688. And finally, the monthly time frame. We have no topping pattern out here. What we have is a decline that found support at where? Well, turns out that what Meta really loves are bullish structured profiles. It's got one for the daily. It's got one for the monthly. The monthly is kind of a thorn in its side right now, but the weekly is a thorn in the side, but the monthly is a beautiful thing. Price found support between that 537.83 and 566.84 level. So it looks to me like Meta wants to trade higher with regard to earnings. And of course, if it takes out, it's just got a TD9 count on its weekly basis time frame chart. If Meta were to really sell off and get below last week's low at 479.80, the weekly time frame chart will still be a completion of a TD9 count bottom pattern out there. You've got your support area on a move to the downside, 493.89 to 505.87. So ELO, I hope that provided you with the information you were looking for Facebook or for Meta out there. Let me just check the phone, see if there's any requests. I don't see anything at this stage. So it's been, why don't we finally start taking some intraday charts out here? We did look at the light sweet crude intraday charts. Why don't we go take a look and see what's going on inside the ES Mini? See if I can be of any assistance to you day traders out there. So if you give me just a moment, we'll pull that up. I don't see anything by email. If you are listening live and it's 8:37 and you want me to look at something, please send that email quick to steve@tfnn.com. And that subject heading, please put radio show question. Now, the daily time frame, the intraday charts here are populating, but that daily time frame tells you the picture. We've got nothing but three small, narrow-bodied candles out there. Is it saving up some energy to blast off to the upside or blast off to the downside? I don't know the answer to that question, but we can take a look at topping patterns, see if support is holding, so on and so forth. We know on the daily time frame that 55.85 level is a key area of resistance. On a 5-hour time frame chart, let's actually populate this chart out there. We've got no topping signal there. We have no topping signal on the 4-hour time frame chart. We do have a Rhodes momentum indicator top on the 2-hour time frame chart, and that says that if price were to close above 55.78.75, we should rally further. But that rally further, well, 55.85 is the center of that daily profile. And that too is a resistance area. So we're up towards resistance. It's trying to figure out what to do. The 30-minute time frame chart found support at its breakout level. That's at 55.41.75 out there. So if you're asking me, what's the key level of support for the ES Mini? I would have to go with 55.41.75. You close below that, we'd likely see lower price. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality
is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Let's do this. I've got the CSNEX set of charts up on my screen out here. A wonderful tool, easily allows us to take a look at so many different instruments to understand the seasonal patterns out here. We'll take a look at the S&P 500 as we speak right now. This has got 97 years worth of data. Now, I can show you exactly where we're at right now today. That's going to be the red vertical line that shows up on our screen. So you can see that from a seasonal standpoint, we are in the, so we've got the sell in May cycle coming, right? Potentially, we have the sell in May cycle coming, with today being the 29th, tomorrow being April 30th, and then on Thursday, we've got May 1st. What we can see here is right now we are actually over a 97-year period of time in a favorable time period. The May cycle, the sell cycle on average, really doesn't begin until about May the 8th out there, lasts all the way till about May 24th, so about a 3-week move out there. Remember, we talk about, 2 to 4 bar moves to the downside, so that would be considered a potential knee-jerk reaction low out there. That's the panel. If we take a look at the months that perform the weakest for the S&P 500, they would be February, they would be May, and they would be September. Now, that's over 97 years. The nice thing is we can look at the last quarter of a century. Doesn't really change things, does it? We've got February, we've got February, in this case here, June, and September, so May being an up month. Let's take a look at the last 15 years worth of data. You've got just May, August, and September. How about the last decade out here, the last 10 years, just February and September? Kind of interesting. But let's go back to the 97-year cycle out here. Let's do more. What do you mean more? Well, we are in a post-election year cycle. And that's what this looks like out here. In a post-election year cycle, we don't really see much of a sell in May. What we see here in a post-election year cycle is a bottom right around April 7th. Folks, go look at your charts. Tell me when the low came in so far. April 7th. So typically, this is a candidate. This is a candidate for a price to run higher and run higher into the early part of August. So if price is to follow this seasonal pattern, this analog, this would suggest that price would run higher into August the 2nd out there. Now, what I can also do is I can detrend this chart out here. So let's use that tool. You might say, what is detrending? Well, everybody would do things differently. In the case of CSNEX, what they're referring to the function that removes the overall trend, like an uptrend or a downtrend. We know that overall the S&P is pretty much in an uptrend out there. So it tries to remove that from the chart, allowing for an easier view of the seasonal pattern. That's what we're taking a look at right now. It does that mathematically by reducing or deducting the price movement proportionally over time. And just again makes the seasonal trend more visible. So now we've got that tool turned on. You can see here very clearly that not only was there a bottom that was supposed to come in around April 7th, the next real significant bottom was April 27th. Basically says yesterday, today out there. And here it shows that price could or should rally into the beginning of August. Then we kind of head lower for the remainder of the year if price, in fact, follows this pattern out there. So that is the CSNEX pattern for the S&P 500. We took a look at the ES Mini. Let's go take a look at the NQ right now. We take a look at the NQ. What do we notice out here? You know, one thing that I do notice is I can see on here in the 30-minute time frame, not that there was a top, the ES Mini the same thing, not that there was a top, but price did find support at its breakout level. So let's move this chart over here. This chart being nothing more than whatever time frame I want to use and its breakout or breakdown levels out there. So we're just taking a look at this. Because why? Because when price pulls back to a breakout area, even if there's not a pattern, that's a pattern. If you're wondering where the buy the dipsters are located out there, they most certainly are going to be at breakout levels. It's up to you and I to be able to try to identify where those levels are or for what time frame it might be. But here what we can see is we had a retracement back in about 7 o'clock in the morning, April the 25th. 19,236 was a level that held as support. That was its breakout area. And we've had this level tested once at 7 o'clock this morning, again at 8 o'clock this or 8:30 this morning. And so far that has held. So I'd be watching for the NQ, the 19,478 area. Now we can quickly go ahead and take this 30-minute chart, turn it to a 60-minute time frame chart, see where its breakout levels are, if anything has been holding. Let's go to a 120-minute time frame chart. What I'm looking for is there a time frame inside the NQ since the bottom where these support levels have held. Now, the bottom that I'm really referring to, I guess, out here really should be April 7th, right? So not so much on the 120-minute time frame chart. Price did break through support there. Let's try the 240. We may not find a time frame. Yeah, even broke through on the 240 out there. So I'll just. What about the daily time frame? I don't want. I'll put that up there, but I'm not going to put it up there. It's just not going to. It's not going to be. Not going to be useful for us. So let's just go back to that 30-minute time frame out here. And at that 30-minute time frame, you want to watch that 19,478.25 level. If we come back to its charts out here, was there any kind of bottom signal as price was making its move lower this morning? And when I look at those intraday charts, I don't see it. I take that back. I see a buy the D point pattern that formed both on the 15-minute and the 30-minute time frame chart. Let's open up the 15-minute time frame chart first. And that had a Rhodes momentum indicator top. And then the A to B equals CD. It did more than a 1-to-1 pattern out there. As you'll see, I'll just move that A to B point over to the C level out there, which is about right here. And then it goes ahead and it does, looks like about a 1-to-2 A to B equals CD pattern, forms that bullish hammer candle at 7 this morning. So it formed another hammer candle out here at 8:30 this morning. So when the buyers are trying to create a bottom or create a low out here. But what that tells you is you really want to watch the low from 7 this morning at 19,447.25. If price were to close below that, well, that could trigger a larger A to B equals CD pattern to the downside. What do you mean larger, Stevie? We can go ahead and draw that in real quickly here. So the A point's going to start at the same thing. The B point's going to be that hammer candle out there. And I'm just simply going to move this over to the highest high after that candle at this stage of the game. Turns out that's the bar that we're in right now. So, is this a price projection? Look, if we take out the bottom of that hammer candle, and again, that number out there is at the 19,447.25 level, then that should take us back towards 19,318. Its TD9 count breakout level for its 15-minute time frame. The ABCD is actually a price projection in the 19,360 area out there. So that's what's going on with the NQ. Why don't we go take a Goldilocks, see what's going on there. Take a look at the June contract. Goldilocks under some pressure this morning, mostly, I believe, because of the U.S. dollar index that was moving higher out there. But still, it's just trading with inside its daily profile. So it does have a Rhodes Momentum Indicator top for the daily time frame. It is going to go ahead and confirm a TD9 count top for its weekly time frame. And tomorrow, it's going to go ahead and complete a TD9 count top for its monthly time frame. Not shown here. Just waiting for the intraday charts here to populate. But we're about to go to a break. So we'll take a look at gold. We get back to the break. I see a 10-minute Rhodes Momentum Indicator bottom, a 15-minute Rhodes Momentum Indicator bottom pattern out there. And that's it. That's what I see. Steve Rhodes with TFNN. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Welcome back, folks. So we're going to end the show here with a mixed bag, just like when we opened up. You got the ES Mini down 5 points, S&P. Our NASDAQ is up 27, Dow's up 123, Russell's up just slightly, 30 cents out there. You've got gold off 24 bucks with silver up 39 cents. U.S. dollar index up 17 pennies as we speak right now. We're going to go take a look at ticker symbol EXLS. This is for Hector and Patty. And as soon as I can get to my chart out here, you've got the EXLS closed yesterday at 44.40. 42.46, not trading much differently as we speak this morning. You wanted support and resistance. So support on the daily time frame is 44.05. It's oscillator and change line. If we close below that, increase the odds of a move back towards its swing point. The swing point from the trading session of April the 7th out there. Watch the volume on that. Volume on that swing, 2.5 million shares. Resistance is between 45.66 and 46.53 for its daily time frame. That's its bullish structured daily profile. On a weekly time frame, we've got a nice TD9 count bottom pattern. Support, well, geez, that's going to be really the TD9 count bottom itself, Hector and Patty. That's at the price point of 39.51. Resistance, 47.18, at the bottom of its weekly profile. Monthly TD9 count top, price finding support at 42.15. So there's your support level. Resistance at 50.37. Now, Excel Service Holdings, we do have the data on the CSNET. We have 18 years worth of data. I have this set to the D trend. Here's what it looks like if I take the D trend off. What it shows that we're basically entering an unfavorable time period. Basically a little bit of April, but all of May for the most part is unfavorable. And this typically finds some type of bottom around June 16 out there. So I wanted to be able to share that with you. That doesn't mean it's going to follow along that pattern out there. Because it's really showing a monthly bottom, a weekly bottom, a daily bottom out there, but price been unable to really get above those resistance levels. So watch support and resistance, Hector and Patty, as I know you will. And folks, thanks so much for tuning in. And if you were listening live, thanks for doing that as well. I'll be back with you tomorrow at 11 a.m. sharp. Stay tuned. Tommy O'Brien is up next. Have a terrific Tuesday, folks.